Okay, if you own a home, or you're even thinking about buying one, the words interest rate cut have probably got your ears perked up. And for good reason. The Bank of Canada has finally started to lower its key interest rate. And trust me, that one move sends ripples through the whole economy. So today, we're going to break down exactly what that means for your mortgage, your wallet, and the entire housing market. So, here's our game plan. We're going to start with the pressure cooker situation that so many homeowners are in right now. Then we'll look at the Bank of Canada's part in all this. We'll cover the rate drop itself, what it means for you personally, and then we'll get to that huge question. Is now the time to buy, or should you wait it out? All right, first up, let's set the scene. Before you can really appreciate why this rate cut is such a big deal, you have to understand the massive financial squeeze that millions of Canadians have been feeling. They're not calling it the Great Mortgage Squeeze for nothing.
And look, this isn't just some headline or an abstract economic idea. For so many people, this is a real month-to-month stress. Homeowners have been hit with the fastest and biggest rate hikes in over 40 years, all while the cost of pretty much everything else has been going through the roof.
Just let that number sink in for a second. 2.2 million. That's how many mortgages are estimated to be up for renewal this year and next. We're talking about nearly half, 45% of all mortgages in the country. All of them staring down the barrel of a potential payment shock. And the scale of that shock, it's just staggering. It adds up to an extra $15 billion that homeowners are going to have to find every single year to cover these higher payments. And you got to remember, that's money that won't be spent elsewhere, on groceries, in restaurants, on small businesses. It affects everybody. And here's what it looks like for a real family. Take a pretty standard $300,000 mortgage. A few years ago, the payment was under $1,500. Now, it's nearly $2,000. That is over $500 more every single month. That's $6,000 a year that a family has to pull out of thin air. So, you might be wondering, how in the world did we get here? And who's in charge of this roller coaster? Well, that brings us to the Bank of Canada. Think of them as the ones with their hands on the master controls of the economy. It all boils down to one simple but powerful word: inflation. The bank's main job is to keep inflation low and steady, right around a 2% target. But you'll remember, after the pandemic, things went haywire. Inflation shot up to 8.1% back in 2022. Basically, your dollar just stopped going as far as it used to. To get a grip on that, the bank really only has one main tool: the policy interest rate. It's kind of like a gas pedal and a brake for the economy, all in one. When inflation is running hot, they hit the brakes. They raise rates. That makes borrowing money more expensive, which cools down spending. But when the economy is cooling off and inflation is under control, they tap the gas. They lower rates to make borrowing cheaper and get people spending again. And that brings us right to where we are today. After a long and frankly painful period of hitting the brakes hard to tame that inflation, we're finally seeing a change. The tide is officially turning.
This timeline really tells the whole story, doesn't it? We went from the absolute peak of the crisis in 2022, we went through those necessary but tough rate hikes, and now we're here. Inflation is finally cooling off, and the bank has started cutting its rate, which is a huge signal that the worst of this fight might just be behind us.
Okay, so this is the big question, right? What does all this macroeconomic stuff actually mean for you and your mortgage? Let's get right into it.
Well, how you're affected really depends entirely on the kind of mortgage you have. If you've got a variable rate mortgage, congratulations, you're the first in line to feel some relief. Your rate literally moves with the Bank of Canada's rate, so you could see your payments go down almost immediately. Now, if you have a fixed rate mortgage, nothing changes yet. You're locked in. That's great for stability, but it means you won't see any benefit until it's time to renew.
And for anyone who's been desperately trying to get into the market, this chart, this is the wall you've been running into. That huge jump in monthly payments is the exact affordability problem that's kept so many would-be buyers sitting on the sidelines. A rate cut is the very first sign that that wall might be starting to get just a little bit lower.
Which of course brings us to the million-dollar question for anybody thinking about buying a home. With rates finally starting to come down, do you jump in now, or do you wait and see if they fall even further?
You know, it seems logical to just wait for rates to bottom out. But here's the catch. There's a real danger in that strategy. See, as soon as borrowing gets cheaper, all those people who've been waiting on the sidelines, they're going to rush back into the market. That creates a bidding war frenzy, and what does that do? It pushes housing prices up. You could find yourself saving a little bit on your interest rate only to pay tens of thousands more for the actual house.
So what's the play?
Well, some experts are talking about finding the sweet spot. Here's the idea. You get pre-qualified for a variable rate now while the market is a bit cooler and you actually have some negotiating power. You buy your home, and then you get to benefit from any future rate cuts as they happen. Then, once you feel like things have settled down, you can always lock into a fixed rate for that peace of mind.
This quote right here just nails the core dynamic of the market. It's a fundamental trade-off, a balancing act. High interest rates mean cheaper house prices, but crazy expensive borrowing. Low interest rates mean cheaper borrowing, but then house prices go through the roof. The market is always, always trying to find its balance.
So at the end of the day, it all comes down to your personal finances and your own strategy. The one thing we know for sure is that the market waits for no one. So the real question I want to leave you with is this. When you think about that trade-off between the price of the home and the cost of the loan, is it possible that your sweet spot, your perfect time to make a move, is right now?